Not being financially stable might be your current situation, but it doesn't have to be your story. In today's world, where a smartphone, the internet, and cryptocurrencies are all within arm's reach, the only thing standing between you and financial freedom is the decision to take action. The opportunities are out there waiting for you to grab them. It's time to stop getting by and start building the future you deserve, guys. And it all boils down, in crypto terms, it all boils down to knowing when to grab liquidity. In other words, understanding when to buy low and, of course, sell high. Does this sound complicated, guys? It doesn't have to be, okay? So once you understand the pattern of the market and learn how to read charts and trends, you will see exactly when to make the move, all right? When to make your next move. So imagine buying a coin when everyone is too scared to touch it and selling it when the price is at its peak. That's where the magic happens, guys. There's this favorite quote of mine. Actually, I forged this quote. It says, master the art of patience, seize the moment of opportunity, buy when the crowd forgets, and sell when they remember. For when they forget, the value goes down, and when they remember, the rush to have it makes it to go up. And hey guys, I know that crypto trading may sometimes look like you're skydiving without a parachute, and you'll feel like you need a James Bond level survival technique to pass through and avoid losses, right? I know that. But the truth is that you don't need to be a genius to play this game. I promise you guys, you don't. All you need to do, or all you need to know, is the right knowledge, a little patience, discipline, and consistency. And soon enough, guys, you'll be out there making the moves that will have you smiling all the way to the bank. The market doesn't sleep. It's always awake, waiting for you to jump in. But with this strategy I'm about to unveil to you, you are not going to be the guy who buys the highs and sell the lows. You're going to be the guy or the one, all right, who the market surrenders to, all right, because you know how to buy, you know your trend, okay, you know when to buy and when to sell, all right, when to buy low and when to sell, so you can just hop on and ride with the wave to the top, all right. This strategy can be used on spot, futures, forex, and can even be used to trade meme coins on decentralized exchanges. Now, first thing first, all right, the strategy requires us to spot and grab liquidity, all right. So as the name implies, liquidity grabbing, all right. What will come to your mind? I know what all of you are thinking is, what is liquidity grabbing? Like, what is liquidity? Yeah, what is liquidity? That's the first thing that's going to come to your mind. After thinking about what liquidity is, the next thing that's going to pop in your head is, how can we spot this liquidity and even grab it and take advantage of it to make profit? All right, so all your questions are going to be answered in this particular video. Now let's move to the first question. What is liquidity? All right, so liquidity refers to the ability to buy and sell a commodity quickly and at a stable price without causing any significant change in the market. Liquidity refers to the ability to buy and sell a commodity quickly, all right, at a stable price without causing significant change. Like your buying or your selling doesn't make the price to go up or down. That is liquidity. Let me give you a simpler term, okay? Liquidity in cryptocurrency means having enough buyers and sellers who are willing to easily trade quickly without affecting its price. That's just liquidity. For the market to have enough buyers, enough sellers, and enough assets. So liquidity aids to make trade happen more faster. A currency or an asset that has liquidity, whenever you just place an order, it just gets executed in seconds, minutes. But if an asset doesn't have liquidity, you place an order and you have to wait for ages before that order gets executed because it has to reach the point at which you place that limit. I'm going to make it simpler for you. Let me give you a real life example. Now imagine a tomato market with only 2 farmers selling tomato, and each farmer has only 10 tomatoes on his tomato basket, and there are 5 buyers, each willing to buy at least 5 tomatoes. Those farmers might increase price of tomatoes because there are not enough tomatoes in their basket to satisfy the demand of the buyers. Now this scenario is called scenario of low liquidity. Scenario of low liquidity because the liquidity is the amount of tomato, and the amount of tomato isn't much, and the buyers are much and are willing to buy. And the sellers are not much and they have the assets and they want to sell. But because of the fact that the demand exceeds the supply of the farmers, then that means the farmers have the right to increase and the buyers will want to buy at even a higher price. All right. So that means liquidity over here is not available, tending or making the price of that asset, of that tomato, to actually go up. But take for instance the second scenario, all right? Let's give or take there are 200 farmers, each farmer having at least 100 tomatoes each in his or her basket. Then it means buyers can easily buy the tomatoes, all right, from any farmer without the fear of the farmer increasing the price due to the availability of tomato in the market. Now, this scenario is called scenario of high liquidity because there are more farmers, more tomatoes, available buyers, and the sellers, which are the farmers, are also available. And now the sellers will not want to increase price because if you increase your price for me, I'll just go to the next person and he's just going to give it to me at a discounted price. So it's going to make the buyers and sellers to buy and sell quickly without even tampering with the price because it has enough, because the market has enough tomatoes. Now, same thing applies to crypto. All right. If there's availability of a particular asset in a sufficient amount with enough buyers and sellers, it will make it easy for buys and sales to happen quickly without affecting or tampering with the current price of that asset, whether BTC, meme tokens, altcoins, anything, right? It happens in real life, it happens in crypto, it happens everywhere if there's a buy and sell in that place. So now, that being said and known, there's what we call buy liquidity and sell liquidity. All right, since we know what liquidity is now, what is buy liquidity? What is sell liquidity? Now, buy liquidity is the amount of assets available to buy. As easy as that. Guys, buy liquidity means the amount of assets that is available to buy, while sell liquidity is the amount of assets available to sell. All right, what I mean is there are instances. Let me show you a chart. Let me just show you a chart. Let's go to BTC. All right, so this is a 5-minute time frame. Let me indicate it. This is a 5-minute time frame, and guys, this is Bybit. Okay, this is not Binance, this is Bybit. So this is a 5-minute time frame, and when they say buy liquidity, all right, it means that the amount of assets that are available to buy, and when they say sell liquidity, it means the amount of assets that are available to sell. Let me explain it. So over here, what happened here is that from here to this point over here is that sellers have been selling, all right, making the price of BTC, each candlestick over here represents 5 minutes. We all know that, right? So sellers have been selling, making the price of BTC to reduce in value. So if you're going to count the candlesticks, it's going to be maybe, let's say, 15 to 20 candlesticks. So in the last 100 minutes, all right, so you're going to just say 5 minutes, since every candle represents 5 minutes. In the last 100 minutes, which is 1 hour and give or take, let's say 40 minutes, BTC has been selling. All right, so BTC has been selling, and sell liquidity can be found. Buy liquidity can be found over here. Buy liquidity simply means the amount of assets available to buy. So wise traders are going to buy right here when the sellers are selling. They're just going to wait for the time when the price is a little bit cheap, and there's a way that you can know that this price is going to go up. So sellers, they don't patronize the market in this region, right? They don't patronize the market in this region. They wait for it to reach this point, okay, and then they buy, and the market moves up with them. So let's go to the next explanation. So on the other hand, sell liquidity, let me clear all this, right? Sell liquidity means the amount of assets available to sell. So the availability and scarcity makes the asset add or reduce value. All right, if the asset is scarce, it reduces value. So when the asset is going down, when sellers are selling it to the buyers, all right, then that means that the asset is scarce in the market. It's going to scarce in the market, and if it gets scarce, the sellers again that want to buy now will start competing to buy at a higher price, while the buyers are going to pose as sellers, okay, and start giving their own preferred price, making the price to go up. All right, so buy liquidity happens here, and then sell liquidity happens at the top. All right, so when it's here, okay, when the market goes here, all right, the asset becomes scarce in the market, and then when the asset goes as high as this place, it becomes available in the market, and then sellers will want to sell, okay, and they'll start competing, because in this place the sellers are much in number. Okay, the sellers are much in number because buyers have already bought it and have made the price to reach a very high peak or a very high level, and now sellers want to sell because most of the buyers that have been buying from this point, they have already made their profit when it gets to this point. So now they want to sell at this point, and the ones that have bought right from this point will start selling at this point. All right, and then it's going to make the market to start going down because sellers are going to start competing for the price to go down. and buyers are going to be buying, while sellers, there's going to be little buyers and more sellers, because the buyers that have once bought want to sell now. I hope I'm making sense. I believe we understand what buy liquidity and sell liquidity is, right? Now, moving on to the next topic, all right? Moving on to the next topic, let's talk about what the liquidity grabbing is. That's the main topic. So, when a crypto trader, tells you or tells you that you should grab liquidity, okay, they mean that you should take advantage of good price by buying or selling quickly before others do. All right, so when he tells you, when a crypto trader tells you to grab a liquidity, it means he wants you to buy the asset when it's here or when it's here. All right, as you can see, the asset has started to go down. All right, so that's just what it means by what grabbing liquidity is. So when I say take advantage of good price, I mean buying at a low price before others start buying, or selling at a high price quickly before others start selling, making the price to change. All right, now since we know that when sellers are sufficient in the market, the sellers have sufficient assets and are ready to sell their asset at a competitive price. By cutting down prices, the asset or the value of the asset tends to start going down because of the competition of the sellers in the market. So when sellers outnumber buyers, the asset goes down, and when buyers outnumber sellers, the asset goes up. All right, so since we know that, all right, at this point, the value of the asset is going to be depreciating, okay, when the sellers are in the market, okay, and that is where we are going to be preparing to enter the market to take advantage of the price fall and buy low, so that when the price or when the asset is scarce in the market, with the buyers now will pose as sellers now, okay, and sell and start selling to the buyers that are going to come in late in the market, okay, and those late buyers are going to be demanding, okay, they're going to start demanding for that asset, and since we are posing as sellers now, we can sell at a higher price, okay, and buyers are going to come competing to buy at that higher price, 1% above, 2% above, 3% above. That's how the price is going to be going until we make our profit, and until it gets to the peak where we sell, and then wait for the market to come down again. On spot, you can also sell on futures and make profit. So this strategy can be used in both spot and futures. All right, now the question is, when can we enter the market and buy low and also avoid continuous price crash subjecting us to loss? When? What I mean by when can we enter the market and buy low is, when can you know that this place over here is where the market is going to stop and buy, and avoid continuous downward movement subjecting us to a loss? All right, so that's just what I want us to discuss now. Spotting liquidity typically means spotting areas in the market where price is trying to bounce back to the opposite direction. All right, now let me repeat it again. Spotting liquidity typically means spotting areas in the market where price is trying to bounce back to the opposite direction. Okay, now since we are buying low with the intention of selling high, when price goes up, our aim is to spot a buy liquidity, and that is what I'm going to show you right now. So in order to spot a buy liquidity, in order to spot a buy liquidity, in other words, an area where it is safe to buy without having the fear that price might continue to go down, the first thing you need to do is to identify previous lows. Bybit has made it, even Binance, all these centralized exchanges, they have made it easy for us to spot the recent lows and recent highs. All right, for instance, on BTC USDT, right, and we are on the 5-minute time frame, this is the recent low as at this point, and this is the recent high as at this point. All right, so but let me look for a more suitable chart. Okay, so let me look for a more suitable chart where you're going to understand this perfectly. Now this is Doge USDT. All right, this is Doge USDT on the 5-minute time frame, and like I've told you, all right, first thing you need to do is identify previous lows and previous highs. All right, what I mean by identifying previous low and is simply identifying areas where the chart, okay, repeatedly bounce back up. What I mean by areas where the chart repeatedly bounce back up is, for instance, take a look at this place. Let me indicate it for you. Over here, the price bounced back up, and it also bounced back at this recent low. All right, so if I'm to draw a trend line now over here, you're going to see that the line is symmetrical. All right, so what we're going to do now is click on this place to bring out our technicals, okay, and then Next, we are going to click on this line, okay, that is the trend line, and we're going to place it, of course, somewhere here. All right, so we're going to place it somewhere here so that we can be more accurate. Let me just even start from here. Good. So we're just going to draw this line so that it's going to meet the other recent low. All right, I hope you are following. So we're going to draw it and leave it like this. All right, and then if you like, you can still draw the recent high. All right, so that it can be more clean and accurate, so that your work can be more cleaner and accurate. Make sure that it doesn't go way above this place over here, since this is the recent high, assuming that this place has not formed yet. Assuming that this place over here has not formed yet. All right, so your focus should just be on this place. Your focus should be on this place, guys. Just neglect this other place. All right, neglect this place. Assume that it's not yet formed. All right, so we have drawn our support line, and now we want to draw our resistance line. All right, so it should just be somewhere around here, and then you draw like this. Okay, you draw to this point somewhere here. Good. I think the line is straight enough. So take, for instance, you have spotted this recent low. All right, you have spotted this recent low over here, and now you're just waiting for an opportunity that this chart, okay, that this entire chart right here is gonna reach or bounce back again to this recent low. And it didn't bounce back after a lot of candles until it reached this point. Until it reached this point right here. All right, so now what is going to tell us, or what is going to make us to know that this, after hitting this point right here, the line, or sorry, the chart as a whole is going to go up or down? Let me show you. So let me just zoom out a bit so that you can get to see. Perfect. So there's this thing we call bullish candlesticks. All right, there's this thing we call bullish candlestick. So when the candlestick hits this line, it refuses to go up. When the candlestick hit the support line right here, it refuses to go down. It refuses to penetrate down and break through the line. All right, and then it formed a hammer candlestick. Guys, this is a hammer candlestick. There are various bullish candlesticks signaling there are various bullish candlesticks signaling an uptrend. All right, so this hammer candlestick is indicating that the uptrend is going to happen. All right, and it happened immediately it touched this line. Okay, so after this happened, the next thing you ought to do is just wait for extra 5 minutes. Since we are on the 5-minute time frame, you just wait for extra 5 minutes to see a confirmation candle. And the confirmation candle came, but it was red, and the next confirmation candle was green. So you can just enter your trade, having a confirmation that this market is going to go up. And what happened, guys? Indeed, the market actually went up. All right, the market went up from the bullish candlestick that appeared. It went as high as this level. All right, so this is one of the ways on which you can be able to tell if the market is going to go up using the liquidity grabbing method, okay, using the liquidity grabbing strategy. And there's however a way or other ways that you can make this requirement meet. All right, so one of the ways to actually make this requirement meet, like one of the ways to further confirm if this is going to be an uptrend after it hits that support line, is that there's going to be an increase in volume. So you can just turn on your volume indicator over here. All right, so if you turn it on, you're going to see that right here, let me indicate it, right here where the hammer candlestick, where the hammer candlestick appears. All right, after waiting for a confirmation candle, you're going to see that there's a gradual increase in volume, okay, and the volume began to increase over here, and that means the pressure of the buyers, or the pressure the muzzle of the buyers is beginning to increase. All right, and then this yellow line on the volume indicator crossed the blue line. It is also an indication that the market is going to go up. Okay, so if you buy here, don't worry. Even if the market retest a little bit, it's still gonna actually go up. And you can also use the Bollinger Band and EMA, but that strategy is going to be explained in the VIP program. So if you're interested to join the VIP program, you can just hit me up on the WhatsApp link in the description below. Now that being said, after meeting these requirements, you can then buy and allow the market to do its thing. Right, and you can also wait for a confirmation candle, like I have explained before, to verify your analysis. All right, so there's another way, okay, and you can this candle over here, let me give you another tip. This candle over here, this hammer candlestick, it can decide to actually bust through this line. Okay, it can bust through the support line, but if it busts through the support line, you just have to wait and see if the buyers are able to push the candlestick back into the support line, leaving a longer wick. but the body of the candle is inside the support line, then it is also an indication that the market is going to go up. So this is another VIP tip I just gave you. All right, and I think this is all we have to know for now about how to buy low and sell high. All right, so guys, please, like I always used to say, don't give up on trading. It's hard, I know. When I was learning, I found it very difficult, but now it's just something I do, like, something like I know. And we cannot be 100% accurate all the time, but we just strive and master the strategies to make sure that 80 to 90% of our trades are entering. And on our days of losses, we won't even feel the impact much, because we've been on profit for the past 80 to 90% times that we've been doing this. So I hope you are able to have the strength to be consistent and be disciplined, because a trader without emotion is a good trader, but a trader without discipline and focus and consistency is just somebody that's just warming the bench. Is just wasting his or her time. All right, so I hope this video helps, and I hope you have a nice day.
You know what's funny? People don't have the patience to dedicate 4 years to building their own business, but somehow they'll happily have the patience to work 40 years for someone else.